Okay, welcome to another market update after the market closed 17th of February 2023. As always, we are looking at the starting off with the S&P 500, the major index. As I keep saying, your individual stock trades are but boats on the ocean that is these larger indexes. So it pays to keep an eye on what's going on. You'd be surprised actually when you look back what trades went wrong, and you'll notice it was because the overall market wasn't cooperating. So let's check in. So catching up with previous commentaries, when I said the downtrend had been broken, let's review that. The downtrend that was in place since March last year broke out, and there you draw the line. That's the trend line, and down, and then just a few weeks ago we broke out, and I called it here, and it went up. But I also said that there would be a pullback, and that's what we had for these last 2 weeks. It's been 2 weeks of pullbacks, and that's perfectly healthy. All the doom and gloom talking heads for the last 2 weeks have been saying, "Oh yeah, it's back to normal again." Actually, no, it's very much par for the course and a healthy thing. So let's zoom into the daily chart then, so we can see this action in more close up. So here we have the 50-day cross is a 200-day up above it, and I explain that was called a golden cross, which is usually an indicator of higher prices ahead. But I also indicated that what many people don't realize about the golden cross is that actually in the immediate term it's usually lower prices, and that catches a lot of people out. And sure enough, that's what happened. So there's when the golden cross happened, and sure enough, for the last 2 weeks it's been edging down. But here's the important thing. This line of resistance here that was overcome when the downtrend was broken that I just explained. So there's that downtrend, it got broken. Then there's a line of resistance right there. You see that when prices are trying to get above it? So when it breaks above that, and then the pullback must not go any lower than where that resistance was. So that's very normal and very healthy what's just happened for the last 2 weeks. Breaks above it and then pulls back to it, almost like a rubber band kind of resetting. And it was very close on Friday, but as you can see, that line is right there, and buyers came in at the last minute on Friday, which is a bullish indication. Actually, that's how the week goes, is usually into the weekend is usually an indication. So we should be set for higher prices this week, but that line must hold, and that's all conditional on that. Remember, nothing's certain, we're just playing the odds. But the odds should favor, now we're going into higher prices, must stay above about 4080 though. What's backing this up? And I've explained this over a few times now, but the lunar cycle, it never fails. For the last 2 weeks, prices have been pulling down, and that happens to also be in the 2 weeks when it was a waning moon. And now it's turning around into a waxing moon. So that means that typically, strange as it may seem, favors higher prices. You think, humans are 60% water, the lunar cycle controls tides. It has an effect on us. So very strange, very interesting, but it absolutely works. Dow Industrials, who've been leading the party, they've been kind of like hanging in here, waiting for the S&P and the Nasdaq to catch up, and they're both doing their part. The main thing is that this 40-week moving average is no longer pointing down. It's leveled off, and the price is back above it. This is a sign of a recovery. So for all the Forex traders out here, here's the dollar, a huge rally, then a massive pullback there to, kind of reset. And these last 2 weeks, because, prices have been going down, there's uncertainty, it's natural for the dollar to bounce up. So I'd expect the dollar to pull back this week. And at the end of the day, it's below its all-important 40-week moving average, which is not a healthy thing. Not nearly as unhealthy, though, as US Treasuries, which is the real reason why US interest rates keep going up. Not enough people are buying bonds. And there was a disappointment for this week. So there's another line of resistance here on TLT, which is bonds, and that's at 107. This is a very powerful line of resistance. That needs to get broken, but for the last 2 weeks, it's been pulling back. So as long as that stays down there, not much sign of interest rates stopping going up. It's just a common sense thing there. Copper, which has been, as I say, the star of the show, which is an indicator of the economy, global economy. It's called Dr. Copper, and that has now got into a very nice uptrend. That downward 40 week is leveling off. So another sign of recovery here. Gold, for the gold people out there, as I explained a couple of weeks ago, this is a very trendless chart, up and down, all over the place. And as I said last about here, it was due for a pullback. It was got overbought. Sure enough, down it goes. Who knows what happens next? It's in this massive trading range here. Can't make its mind up, which flies in the face of this inflation narrative. Oil is in a sideways to downwards trend now. The 40-week moving average has rolled over and the price is below it. This, forecasts steadily lower prices ahead for oil. So that is all for this week. The takeaway, if I had to make one, is that we're going to see higher prices this week, generally with the overall market, and that's to continue the recovery. And let's see this 40-week turning up. And then we really should start to see some good action ahead. Speak to you next time.